Welcome back. Today on the Byte-Size Brief, we're going deep on Snail Inc., ticker SNAL. Now, this is a small gaming company that, frankly, seemed to come out of nowhere to become one of the most talked about stocks on the market. We're going to dig into the anatomy of this massive stock surge and figure out just how a company on the ropes can suddenly look like a heavyweight contender. Yeah, you're seeing that right. Plus 276% in a single day. We're not talking about a slow, steady climb here. This was a flat-out rocket launch in April of 2026. And, whenever you see a move this violent in the market, it just begs one question. How in the world did a struggling gaming company suddenly explode like this? I mean, this is a company that was bumping along near its 52-week lows. Its financials looked, let's say, shaky at best. So what could possibly happen to trigger such an insane reevaluation by investors overnight? Well, that's exactly what we're going to unpack today. All right, let's start with the catalyst. To understand this surge, we got to find the single piece of news that basically lit the fuse. And believe it or not, it all boils down to one critical business contract. So here it is. This is the big news. Snail's most important asset, by far, is the Ark gaming franchise. But here's the catch. They have to pay a massive licensing fee for it. On April 6th, they announced they'd renegotiated that deal. And look at this. Their monthly payment dropped from a hefty $2 million down to $1.5 million. That's a cool $500,000 savings every single month. Now, you might be thinking, $500,000 But for a small company that's been bleeding cash, saving $6 million a year isn't just a nice to have. It's a total game changer. It's like they were treading water in the middle of the ocean and someone just threw them a massive life raft. The market saw this and reacted instantly. Suddenly, there was a real, tangible path to profitability. But to really get why this one deal could have such a massive impact, we need to look under the hood at Snail's business model. Okay, let's talk about the engine that makes Snail Inc. go. And honestly, it's not complicated. For all intents and purposes, Snail is the Ark company. Their entire business, their whole identity, it all revolves around this one single massive piece of intellectual property. A game about survival and, well, dinosaurs. And just look at these numbers from the end of last year. This isn't some flash in the pan. Across all its different flavors, you've got the original game, Survival Evolved, the remake, Survival Ascended, and the mobile version. Ark is an absolute beast. We're talking hundreds of thousands of units sold, and combined, hundreds of thousands of people playing every single day. This one franchise isn't just part of their revenue. It's pretty much all of it. And hey, don't just take my word for it. The company's own leadership basically says the same thing. They see Ark not just as a hit game, but as this durable, long-term machine that just keeps on going. And that right there, that deep, deep reliance on a single IP, well, that's both their greatest strength and, as we're about to find out, their biggest vulnerability. So with that huge cost reduction in their back pocket, what does the future look like if you're an optimist? Let's dive into the bull case. This is the argument for why that incredible 276% jump might not be the end of the story, but actually just the beginning. What do the bulls point to? Right here, a jam-packed, multi-year content roadmap for their main game, Ark Survival Ascended. Look at this schedule. They are not letting this thing get stale. They're planning a steady drumbeat of new downloadable content, or DLCs, all the way through 2026 and into 2027. And of course, every single one of these releases is a brand new opportunity to go back to their massive dedicated player base and generate fresh revenue. And this isn't just wishful thinking. Wall Street is taking notice. After that licensing deal, at least one analyst, Michael Kupinski over at Noble Capital, jacked up their price target to $3.50. Now, from where the stock was trading before the pop, that's a potential upside of over 800%. The logic is pretty straightforward, right? You've got lower costs, plus a very clear pipeline of used stuff to sell. You put those together, and it starts to look a lot like a classic turnaround story. Okay, but every story has two sides. And there is a really compelling and frankly pretty urgent counter-argument here. This is the bear case. And it suggests that this huge stock surge is maybe nothing more than a speculative frenzy that's completely ignoring some very, very serious problems lurking just beneath the surface. If you look at their most recent financials from the end of 2025, the picture gets a lot darker. Even with Ark being as popular as it is, the company was still losing money. Net revenue was actually down compared to the year before. They posted a net loss of nearly $1 million. Even their EBITDA, which is a key measure of how profitable the actual business is, was negative. This is the ugly financial reality that big stock pop seems to be ignoring. And it gets even more concerning when you look at their cash situation. There's this metric called the current ratio, and it's super simple. It just measures if you have enough cash and easily sellable stuff to pay your bills for the next year. You want that number to be above 1. Snail's was 0.6. What that means is, for every single dollar they owe in the short term, they've only got about 60 cents on hand to pay it. That is a massive red flag for a serious cash crunch. So, as if the financials weren't scary enough, the company is also dealing with a huge regulatory threat. They got hit with what's called a Nasdaq deficiency notice. And that's exactly what it sounds like. It's an official warning from the Nasdaq Stock Exchange saying, hey, you're not meeting our standards anymore, and you're at risk of getting kicked off. And this isn't some far-off, maybe someday problem. We're talking about a ticking clock. The company has a hard deadline, May 11th, 2026. They have to submit a plan for how they're going to get back in compliance by that date. And if they can't, or if Nasdaq doesn't like their plan, that could trigger the delisting process, which, for a public stock, is an absolute catastrophe. So you can see the conflict here, right? It's this incredibly intense battle between a really promising turnaround story and some very, very real risks. So let's lay out the key dates and events you need to be watching that will decide which one of these stories actually wins out. Okay, there are 3 huge things to keep on your radar in the very near future. First, that May 11th Nasdaq deadline is everything. What's their plan going to be? And more importantly, will Nasdaq buy it? Second, we've got their Q1 earnings report coming in mid-May. This will be our first real look to see if that cost cutting is actually helping the bottom line. And finally, those new content releases in May and June. The big question is, will players show up and, actually open their wallets? And all of this leaves us with the million-dollar question, doesn't it? Was that 276% surge the market being smart, correctly sniffing out the start of a historic comeback for a beloved gaming franchise? Or was it just a speculative bubble, fueled by one piece of good news while everyone ignored a mountain of risk? The next few weeks are going to tell us everything. That wraps up today's deep dive on Snail Inc., SNAL. For a sharper, more candid discussion, join us on the full audio podcast. Drop your questions and takes in the comments. We read every one.